The rental market is very, very strong. Interest rates are on the rise, and buyers in today's market are trying to make the numbers work. In this video, we're going to talk about what is going on in today's market. This is a market update video predominantly for the Orange County multifamily market. So to dive in real quick, rental market is very, very strong. They're not building any more supply. That's been going on for a very long time. So there's no changes there. There's very little to rent. There's not a whole lot on Zillow or Hot Pads. I've checked with the property managers that we use for the apartments that we own, and they said there's no change within the rental market. Things are very, very strong, and that's up and down the coast, all through Central and North Orange County. Also, one thing to look at with interest rates rising, the rates have gone up 5-6% for single family homes. That's going to put a lot of folks that were looking forward to buying a home likely back to some of those are going to elect to choose to hold off, not buy, and stick to renting. So the higher rates could help impact a strong rental market moving forward. Going into interest rates, this is a very big part of it all that I want to talk on this video because that is the most volatile and ever-changing thing right now in this marketplace. So let's talk about it. Rates. The highest rates in the market for conventional financing is between 2 to 4 units for non-owner occupied plexes. These rates have gone, I've seen them personally, from the mid 3s all the way up to the high 4s, low 5s. That's a big change, and that's just happened over the past 60 to 90 days. On the commercial side between 5 units and up, 5 units to 50, that's typically where a lot of the transactions take place. The rates went from the low 3s to the mid to low 4s in that same period of time. Now that hasn't rose as much, but that can be a big change in someone's cash flow because a lot of these cap rates that we're transacting on within this market are very, very low. So we've seen 100 basis points run that on an interest rate can affect the cash flow by 25-30% on a couple of assets that we underwrote. And that's affecting buyers. You know, buyers are looking at, well, these interest rates are now negative leverage, right? That's coming back into the conversation again. We're hearing negative leverage, and that basically means that the cap rate is lower than the interest rate. The interest rates are higher, so the money that you're borrowing, the return is lower than the cost of capital. So folks want to have, as a buyer, you want to have either neutral leverage or ideally positive leverage when you're acquiring a multifamily property. Historically, that is not the case for Orange County, but there has been some pushback on that. The coastal market has been on fire, and even though the interest rates are very, very low, there isn't really a shortage of buyer demand for coastal properties, and let alone other North and Central Orange County markets. There's really not a lot for sale within the marketplace, and I think that's holding up and making it still a very strong seller's market on a lot of instances, because if you're a buyer, there's not a whole lot to choose from. There's very little available for sale. So interest rates are a very big part of what's going on, and I've got a little story to share. I'm currently in escrow buying a small little apartment building right now, and I got retraded by my lender. It was the first time it's ever happened. It was a lender I've never worked with before. I went with them to start a relationship because they had the lowest interest rate within the marketplace. So I elected to not go with any of the relationships that I've worked with previously and start this new relationship. Well, I should have listened to my gut. I saw some signs, and I ultimately didn't have a backup plan until the very last minute. So I got retraded, and that, affected me. It ended up costing me because I had, at 11th hour, I had to switch over to a bank that I had a relationship with to kind of revive the deal and get the property back on track. And big shout out to First Republic Bank because they were the relationship that I had. I went back to them at the 11th hour. They got the property back on track, and they were able to resuscitate it. But if I would have had a backup plan or gone with them initially, I would have gotten a much lower rate, but the rates rose. So it's really big on working with a relationship you have on the front end. If you have somebody that you've worked with, I'd probably recommend sticking with them versus chasing an interest rate out in the market with a bank you don't know who they are, because that could come back and bite you. It's just right now, relationships are more important than anything, and having a backup plan is very, very, very sound. Another thing I want to talk about is with buyers. Buyers feel that rates are just going to continue to keep climbing. So what's the need to jump into the market right now? There's a lot of feedback that we're hearing as a broker of buyers are just going to wait. we're going to see it play out. And then the buyers that are in the market that have a need, they're trying to make the numbers work. And it goes back to that positive leverage, or some of the properties we're selling are having there's negative leverage, right? And because of that, we have to have a compelling enough value add story in the property that we're selling so a buyer's willing to take a higher interest rate and a lower cap rate. And that's something that's really important. If you're a 1031 exchange buyer in this market, it's tough because the market pricing hasn't really changed, but the interest rates have changed. So it's been tough, but luckily we have helped source a few off-market opportunities for some of the investors we're working with that have a need to buy. We also have 15 properties that we have listed and put into escrow just over the past 60 days. A lot of that is within this interest rate run up. We're still making a lot of transactions happen. Sellers are asking, hey, is it still a good time to sell? What should I do? I don't know what's going on in the market. I'm watching the news. It doesn't look so good. Is it still a good time to sell? And the answer is, if it still aligns with your business plan on a timing level to sell, then absolutely from a market level, it does make sense to sell. Waiting might not make the most amount of sense. We don't know what's going to happen with rates. But fundamentally, it goes back to interest rate or the rental rates. The rental rates are so strong, we're not seeing any change in that. So it's really hard to see a whole lot of discount coming around the corner, but we will have to see how things play out. That's exactly just what we're seeing and hearing on the front lines within the market. We do feel that transaction volumes are going to drop. Transaction volumes have a high likelihood of pulling back because interest rates are ticking up and some buyers are saying, hey, look, I'm going to hold off, I'm going to wait. The sellers that do ask us if it's a good time to sell, we do tell them we've got to work with a buyer that has a need, not a want. The need, if they're in a 1031 exchange or they need to buy another property to cost seg to get a big write-off before the end of 2022, because this is the last year of 100% bonus depreciation. There's things like that that will create a need, or if it's just a once in a lifetime opportunity to acquire a property, that's going to create a lot of buyers because there's so much liquidity in the marketplace. That's going to create a lot of buyers to step up and step into the marketplace and transact. So you got to work with a buyer with a need. Outside of that, we just see a lot of big appetite for multifamily real estate back to, especially on the coast. We have a number of properties anywhere from San Clemente, Dana Point, Newport Beach, Huntington Beach, and we're seeing a lot of buyer appetite for those properties, aside from the fact that interest rates are higher. A lot of investors feel those are very well insulated properties, and if there is some type of further pullback within the marketplace, they feel that is a flight to quality. They still want to own hard assets as it's a good hedge against inflation. And then they also feel that it's really just hard to get into the coastal market, and there's always likely going to be a buyer that's going to want to take them out in case they want to sell down the road. So that's the multifamily update. Again, one thing I want to point out is I shot this in a previous video, but August 1st, we are, as housing providers, able to issue out up to a 10% rental increase moving forward. So expect to see a lot of that happening because the rent control under AB 1482 is 5% plus CPI, capped at a total of a 10% max increase. And that is where we are. So we're going to see a lot of that. Let's see how that plays out. Let's see how well the rental market absorbs some of these higher rent increases. That's going to be something that we'll see play out. We'll add video updates on the second half of the year, how things are taking place. But that is a snapshot in July of 2022's market update. If you want to talk one-on-one about the market or anything that you're looking to accomplish, feel free to call me anytime or anyone on our team. We're here and happy to help. Thanks so much for watching, and we'll see you on the next video.